Welcome to the latest Ticker TV interview. I am Donald Leggatt and I'm joined today by Brad George, CEO at Orosur Mining, a mineral exploration company primarily focused on gold in South America. Orosur's strategy is to discover Tier 1 projects, and currently Orosur has 100% ownership of the Anza gold project in Colombia. They have 51% of El Pantano in Argentina, with the prospect of taking that to 100%, and lithium projects in Nigeria. Orosur is dual listed on the Canadian ASX.V and on AIM, and has just successfully raised around 6 million Canadian dollars, which is £3,240,000 in sterling equivalent, in a private placing, which brings in a range of new institutional investors to its register. Greetings, Brad. How are you today? It's been a while since we've done this together.
It has been far too long, Don. We both seem to be getting better looking with time.
Isn't that a joy? Getting older but better looking. We're just blessed.
We are.
Great. Now, I've got to say, 6 million Canadian dollars raised. That's a job well done, isn't it, Brad? Well done. Congratulations. How is this raise different from previous placings? And what are the implications? Tell us all.
Well, look, yeah, we were happy. I mean, it's still tough out there. So to get the reception we got was highly encouraging. The Canadian system is quite drawn out. We actually fill the book, or we overfill the book in about 2 days. But then there's 10 days of paperwork. The Canadians do have their paperwork. So good, good exercise for us and very well received. I guess there's 2 points that are key for us. First is mostly Canada. So as you mentioned, we are dual listed, but London's always dominated by extreme degree to 95% liquidity. We had to make the TSX work. It's expensive. It adds complications. You either make it work or you leave. And to go to Canada and to get liquidity into that Canadian market was key for us to attract, or to be able to attract a much larger audience in North America who prefer the TSX. So that was key. And secondly, mostly institutional. A range of it, but mostly institutions in North America, Europe. There was one Asian institution and one in Australia. So we've lifted up that sort of shareholder base to the bigger pots of money. Now that's not to denigrate the retail base. I mean, they've supported us through thick and thin, more thin than thick perhaps.
Yes. Presumably you're quite a big fan of the retail audience in the UK.
Well, absolutely. But, if we are going to be able to give them the returns that they deserve, we need to bring in new shareholders. And that's our job. One, to do the work and to market the company. So to expand the shareholder base is good for us ultimately. And if things go well, good for the retail base.
So what triggered institutional interest in Canada, Brad?
I think it's just we popped out of the pack. Now, I don't know the exact numbers, but people tell me there's between 2,000 and 3,000 junior miners or explorers out there, which is a hell of a lot. But depending on who you ask, there's probably 10 times too many than the market needs. So that by definition means that there are 80, 90% of them have no value and probably never will. Now I'm not going to get into that argument. And I'm not going to claim that we're now the 10%, but I think at least now we might be in the conversation or near enough to the conversation to give the more, or perhaps the braver institutions, the opportunity to take an early punt. So it's jumping out of that pack with the drilling at Pepas that got us noticed. And that's just, really flowed on from there.
I would have to say there are lots of, it's actually not so hard to find resources. I think the tricky bit, and you can tell us more, the tricky bit is finding large mineable deposits. Is that fair?
Large, I say mineable. Now, ultimately the question is, well, what are the chances of an exploration project being a mine, a big or a small mine, being economic? And that's the question. I don't care if it's big or small. Yeah, with 3,000 companies, there's lots of projects out there that are either have been around the block 5 times with different companies and have just never gone anywhere, or they're early stage. There are issues there that they're just never going to be economic or never going to make it to the final hurdle. But the the key thing or the key trigger that jumps it out of the pack is a drill hole which returns ore grade over ore width. And we did that with spade to Pepas. Now, that doesn't guarantee it's going to be mine, but that jump from a cunning plan to really good drill holes is the really big step that reduces the probability from 1 in a squillion to, okay, this looks interesting. So it's that ability to just make that first, I won't say discovery, but to make that sort of first couple of holes that say, yes, something has gone on here, is the really big change. So those first couple of holes at Pepas from December last year were pretty crazy, and they've carried on being crazy for a while now, and that got us noticed. So as one institution told me, they seem to be management proof, that even we can't stuff them up, which is I think a compliment. I'm not quite sure, but I'll take it as one.
They seem to be management proof. Yeah, that is quite a funny comment. So how economic are these finds, these latest finds, taking everything into consideration that you've discovered so far? How economic does Pepas look at this stage?
The question of economics is not an easy one. I mean, everyone gets focused on how many ounces, and yes, the more ounces the better, but not all ounces are created equal. Now, if we look down the road from our project in Colombia at Collective Mining's Guayabalas project, that's a monster. That's proving to be an absolutely huge deposit. But huge deposits cost a lot of money. That will take tens of millions of dollars to drill, years to permit, billions to build, and so on and so forth. It'll be a big project. It'll be long-lived. That's for the big boys. I don't think anyone wants little Orosur to have that just yet. Pepas is a different beast. The size, we don't know yet, and that's a fair question we could ask. Well, we don't know. We're expanding as we go. But the nature of the first couple of holes, high grade, thick at surface, makes a big difference to the size hurdle that you need to pass to make an economic. So being high grade at surface is the absolute sweet spot. It's just there, dig it up. It gives you options. A small project can make a lot of money. A big project makes more money. But the size hurdle is much lower. So our question is, well, that gives us options. We can look at a small mine, a large mine. We can look at selling ore down the road to the nearest mill. We can look at a range of things that might make this work. We don't have a path yet, but we have this suite of options. So our view is that small high grade is good, large high grade better, but we're beginning to now examine the options of, well, there is something there. Let's look at all the ways that we can possibly move this forward. But certainly, with the gold price where it is, high-grade material can be extraordinarily profitable.
So what are the obvious question, what are the next steps at Pepas?
Well, we drill. I mean, we're drilling, and that's going to carry on. But as I said, there are different ways to skin the cat, and my apologies to cats. One of the issues, or what we would normally do in a traditional situation like this with a new discovery, is we would just drill, we would define the margins of this thing, and then we would come back and we'd infill and go to a resource in a couple of years' time. That will be the standard way of doing it, and then build a mine accordingly. But when you're looking at a situation where you've got high grade at surface, probably very low capital costs, a number of other mines in the region, good transport, then we might think of doing things a bit differently. Now I'm getting older clearly, and I haven't yet got my head around the gold price of 3,000. I'm still thinking in my old way of what grade you need to have to mine, what kind of grade you need to handle transport to a third-party mill. I have all these numbers in my head from yesteryear. They're all wrong now. We need to go away and think about what this gold price means. Now, in the old days, you said, okay, we want to ship the ore to a nearby mill. That might cost me 1 gram or 2 grams a tonne. Now it costs me a fraction of a gram. So all of a sudden, the traditional way of doing it is out the window. It still might work, but there might be an alternative way. So we might think about, well, we'll grow Pepas, but we might do a small resource first to allow us to begin to have those conversations and examine those options. So right now, it's I'm heading down to Colombia in about a week's time with Louis and the team, And we can say, righto, what do we got? Let's look at all the options. Well, 1, 2, 3, 4, 5, and then think about what we need to do to make those options remain on the table as we expand the resource. Big mine, small mine, whatever, and look at all the potential permitting issues. We're not there yet, but to get a mine permitted, there are things that do take time, such as environmental studies. So what are the things we need to start now in order to have them ready in a little a bit down the road? So it's a very nice project in a very nice place, in a very nice gold market. So in the next week, we're having a very long chat with all the team on site, and I'll report back in a week or two with all the outcomes.
Okay, if there were a possibility that you might become, that it might work as a low-cost, near-term producer, so that Pepas was actually you able to get it in production relatively quickly, where would that come in terms of 1, 2, 3, 4, 5 different options, do you think?
I think, well, it depends who you ask in the market. One of the complications in any country ultimately is the permitting process. And Colombia has its own permitting process. It's no better or worse than others. It's just different. One of the big issues in any country is for example, the disposal of tailings. So if this is just hypothetical, if we, for example, examine a process where we sold the ore to a third-party mill, the tailings goes away. We don't. That's their problem. We just dig a hole and we sell the material. So there are probably factors there that are not economic but are more to do with the permitting process. Permitting a big mine, a plant, a tailings dam will take this long. Permitting a mine with a plant tailings somewhere else might take a shorter time. So we'll examine all the processes and examine all the options, and not tomorrow, but we'll over time begin to communicate to the market where we think the best path might be.
So I think a sensible next question would be to ask you about suitable mill options nearby. You said that transport was relatively cheap and good. So talk us through the mill options.
There are a number of mines in the area that have surplus capacity. We've not spoken to them, not yet, but we know they exist. For example, to the north, there's the major mine at Politica. They've got some substantial problems with illegal artisanal miners, so their plant has huge untapped surplus capacity. There's one example. Haven't spoken to them, just an example. I think the key is there's probably 1, 2, 3 or 4 that are within reasonable range. But equally important is that we're on the main road. Pepas is less than 2 kilometres straight line from the main Cauca highway. So that's, okay, our track needs a bit of work, but we can go down the hill to the main highway and we have a clear path to a number of mines. Speculation, I'm not saying that's what we're going to do, but it's just on our radar screen that these options exist, and we'll begin to think about what those costs might look like so that we can then compare with the standalone option and make an informed decision in a year's time.
Okay, let's draw a line under Pepas temporarily for now and talk about El Cedro. You appear to have a sort of an abundance of riches in Anza. It is quite a thing. You've got a potential gold porphyry system to the south with El Cedro, haven't you? Put that in context for us.
Well, we think we do. We've only just got there now. So our teams are just on, as we speak, on site mapping and stuff. I haven't been there personally. That was first discovered by Anglo-American 10 years ago or more. And then our old JV partners, Agnico and Newmont, mapped it and expanded. Now, they obviously know what they're doing. These are big guys. We do trust their geological ability. But we want to go and see ourselves. And particularly in the context of what we're seeing coming out of collective mining's projects, some of the drill holes coming out are just mind-blowing. So to have one of those would be great. But of course, that's a very different beast to Pepas. In terms of the time and the cost to drill it, you add 2 zeros to the end. So it's a really big beast to really get into. So if we do have one, and we're seeing all the right rocks, it is a porphyry in a geological sense. Whether we get the high-grade gold remains to be seen. We certainly have seen high-grade gold in certain spots. We've seen 5-10 grams in rock chips around the area, but that's not not yet continuous. But so it does show great potential. So we'll map and sample over the next month probably, and those results will come through. And then make a decision once we know what we've got as to what we do, because as I said, that's to drill those beasts is a really big job.
Yeah, strategically, you need to decide whether if El Cedro were to be the winner, whether you go first with that or first with Pepas.
Yeah, it would need a lot more money to drill, and if it proved up to be of any value, that's a massive, multi-billion-dollar project. So we'd have to make a call at the time as to whether we do it alone or we find a friend. But as we've seen Agnico, for example, take a major stake in the collective, it demonstrates to us that the majors do now see Colombia as being investable. So Agnico's there, B2 Gold is there, Anglo Gold is still there. So increasingly, the politics is improving, but these companies have to go where the gold is. That's just the life. So if it just turns out that these massive projects are in Colombia, then they've got to go to Colombia. So we'll do the work, and in a couple of weeks to a month, we'll say, okay, this is what we've got, and we'll sit down and decide whether it's within our capacity financially or talent-wise, or we find a partner. So, but that's a decision for a couple of months' time.
Talking of politics improving, you now, of course, own Anza 100%, which means these are your decisions to take regarding El Cedro, regarding Pepas, and in many respects, that having been through what you've been through, that actually must come as a great relief, I would have thought.
Oh, God, I mean, much as I admire the work done by our JV partners, I'm glad they're gone. I mean, just being in charge of your own project just makes life so much easier. We can make decisions instantly. We don't have that weeks and chain of command nonsense. We can just do what we want when we want. So that's good in a management point of view. But the key point was just having 100%, and that was really key. The JV partner had earned 51. And they could have just stepped back and gone to 49, and we could have, over time, diluted them away. We said, no, we want 100% now. If you're going to go. Give us the project back. We'll pay you a royalty. They were happy with that. We were happy with that. And from our point of view, it was just a valuation point of view, is that if you've got this unknown equity in the project, well, what the hell are you worth? Are you 50? Are you 49? Are you 60? You just don't know. So having 100, people know what we are. They can do the maths now. We own the project. Here's the royalties. It's a very easy
It's worth saying publicly, Brad, that you should be very grateful to these folks for having been gentlemanly on the way out, because they've given you a good hand rather than a bad hand.
Look, yes. I mean, in all, I'm not going to throw them under a bus. They left for internal political reasons, and yes, and they were very, very fair in the negotiations. But I think it was win-win for all. I think Newmont had bigger fish to fry with the Newcrest merger. Agnico have gone off to collective, and maybe Agnico will come back. Who knows? But they were quite happy to see the deal done. We can talk again, but having 100%, the JV's gone. We basically bought the JV. Now we can do another JV. By having 100%, you can do that. You're not doing JV upon JV upon JV. So having 100% just gave us all, one, we're back in charge, and two, it gives us the option to being able to do certain things. We can do a JV, we can break it apart, we can sell assets. Just having that suite of options makes life so much easier, particularly, again, in a very buoyant gold market.
You're very focused on gold and very focused on South America, which takes us to El Pantano. It's been quiet for a few years there, and I suspect you've just been heads down and doing a lot of interesting work. So what's happening there? El Pantano, please.
Well, as a country, it's gone crazy. I mean, setting aside the politics and Javier Milei and all his sort of I'll call them improvements. The country's gone from being a bit iffy to being the place to be. So it's we wanted to get new projects. Once 4 years ago, when Anza was doing well, we had money, we had time. We want new projects, and I looked at hundreds of projects. These old dogs have been on the block 5 times. There's nothing I wanted. They all had problems. So we thought, back to grassroots. We can do it. The market won't fund it, but we had the funding. So the keys were the right area, the right geology, big mine in the district, the right geological structures, a really big piece of land, and the right entry cost, or the right deal. And we were lucky, I guess. I'll say more luck than skill. We found this project at a time when nobody wanted to be in Argentina, 3 to 4 years ago. It was a big piece of land, 600 square kilometres, zero entry cost, low cost first couple of years, had all just gorgeous rocks, all the right structures and all the right alteration that you want to see for these systems. It all looked absolutely juicy. And very oddly, we had this JV path to 100%. So we did this deal, and 3 years we've just been mapping and sampling. It was untouched. Literally no one had walked the earth there. Just mapping, sampling, doing ground mag, everything stacked up. It's all ready to go. There's a geophysical crew there now doing IP, and we have drill permits in place. And we hope to be able to drill in the middle of the year is the current plan. But all of a sudden, the phone's ringing. One of the things that happens when you have a gold boom is that everybody wants gold projects. These 2,000 companies suddenly realize they need a good project, and that's a large piece of land in the right area. And we happen to have a vast chunk of the Deseado Massif. So we're getting phone calls from majors wanting a JV, and we're getting phone calls from juniors and from bankers wanting to know whether we want, for example, to spin it out, as an example, or do an RTO. The answer to both is no. We're saying, look, thanks for calling. I appreciate the interest, but we think the project's now just at a very interesting point. And it gets no value within Anza, within Orosur right now because of Anza. But we think it's really at that brink of getting very interesting. So our view certainly is now, with the funding in the bank, is to work it ourselves. Again, as it moves forward, we'll reassess. But right now, we've found ourselves, by more luck than design, with a very valuable asset in the market size, in exactly the right place, in the right commodity at the right time. So
I'm really not sure how much luck has been involved, because you knew exactly what you were doing 3 years ago, because you told me so. And now it's just come good, but I'm not really sure of the luck part. In Scotland, we say fortune favours the brave. And to me, it appears as though you've put your money where your mouth is, been brave, and it's coming good for you. There is a question coming. How many years would it take of drilling and sorting out the project before you started more seriously listening to those people who are coming to you on the phone?
It's these particular projects in the Deseado, they're low sulfidation systems. And if we look back at, sorry, I'm getting into a boring talk about geology. If we look back at the history of, say, the big one, Cerro Negro, which is Newmont, 20 million ounces, absolute monster. I think it was the fourth company to own it that found the gold. The previous three missed everything. It's knowing what to look for. And so we've learned from the mistakes of those previous companies, and we now understand how these systems work. And with help from Newmont. Newmont, again, our biggest shareholder, they're helping us, or have helped us, and they've given us their examples. So those previous histories of the 80s and 90s where these things were missed, we've learned from it. So we now know what to look for. So we would hope to, if we begin drilling, you can't guarantee these things, but once you've got a couple of holes into interesting material, then things can move very fast. But it's the first hit, it's the first ore grade, ore thickness hit that everything goes crazy. So once we get that, and then I can't promise you that, and I can't figure where that will be. But
you just told me something very interesting. Newmont are actually giving you technical expertise. They're being helpful.
Well, they are our biggest shareholder, so it's in their interests to do so. And obviously, it's about 80 kilometres from Cerro Negro. So yeah, they've been very supportive, and they took us to Cerro Negro, and they came to our project and liked what they saw. So yeah, they're not there every day, but they certainly have given us some advice and given us some guidance as to how these things work. So the plan would be, all things going well, we hope to be drilling, or we'd like to be drilling in the middle of the year, or at least have that decision made.
But that's free and very authoritative consultancy you're getting there. I'm most impressed.
Well, there's no such thing as a free lunch. I'm sure they'll get us in the end, but But again, we'll just, if Pepas moves forward in a different way, then again we may need to make a choice. Can we do all three?
Good Lord. So
So
let's talk tin projects in Brazil. Last time we spoke, you actually had a tin project in Brazil. I understand that is no more. It's a great shame. It sounded very interesting, and I did think it diversified the portfolio nicely.
yeah, look, I love the area. I mean, Brazil's great fun. It was a great area, and I love the project technically, but the timing didn't work out. We did a bit of work. It looked good, but at the moment, when at the end of 23, when Agnico and Newmont told us they were off, there was a looming JV commitment due on that project in Brazil, and we said, well, we can't fund all of these things. You know, we know, albeit it might take a year to get the Anza deal done, and it did, that we can't do all these things. We suddenly now have to take Anza back. That's going to cost money. We don't have the money. Something had to go. So that sadly was Brazil. Look, we might go back, but I love the project, but it was just a commercial decision based upon timing of JV commitments. So that's life.
But as I say, that takes me back to the point of you guys are being very wise rather than lucky, because you're taking tough decisions about dropping projects which are perfectly decent. Now, a lot of companies would try and struggle on with everything.
Well, I think it's a key of having good projects. If you only have one project and it's a bit of a dog, then you've got to cling on. And we see these companies just beat these things to death for years because they have no other choice. We at least have a number of options, and that's how it should work. Is that you put fingers in pies, you push them forward, you see how they go. It doesn't work, you push it, you move on, you drop it and move on. You can't become emotionally wedded to these things. People do.
You've got good options. That's what you're telling me. It's good to have good options.
Well, so far. So we'll see how they go.
Let me take you to lithium in Nigeria, which is a current project. So tell me about lithium in Nigeria.
Well, lithium in Nigeria is, again, we get a few odd comments about lithium in Nigeria, both lithium and Nigeria. The point I would make, I guess, is that projects take time to gestate. They don't just appear overnight. So, and we just talked about El Pantano. That's been 4 years in the making to get to the point now where it's been interesting. The Anza project has been over 10 years. We bought that project in December 2014. So it's over 10 years to now suddenly become an overnight success. And that's 10 years of hard slog. When that was bought, 2014, Colombia was a no-go zone. The gold price was at the back end of a very long bear market. You couldn't give the stuff away. And people thought we were mad. So the key point in all these great projects, the good projects, is that more often than not, the companies entered them at a time when they were not popular. Maybe when they were just the wrong place at the wrong time. People thought they were mad. It's a big risk. And then they had to fund them through those lean years in the midst of a disinterested market. And suddenly they come good. So it's this sense that you have to think in a 5-year at least time horizon. I mean, the market thinks day to day, but the company must think in 5 years. So we think lithium's, okay, it's bad now, but lithium we think will come good in the future. But what you don't want to be doing is trying to build a portfolio when the market's hot. To try and get a gold project now, forget about it. I mean, you're going to pay through the nose for some cast off bit of crap. So the time to be building projects and building acreage is when no one else wants to know about it. So we think Nigeria's challenging but interesting. We can work there. We think the commodity has potential down the line, but importantly, our holding costs are very low. So we have the time and the patience to expand that. Now, we may eventually decide, no, we don't want to do it. But at the moment, it's grow slowly, expand the project. Don't spend a lot of money, but just see how it goes and how the market turns. So it's just, I guess the point is that you just can't react to whatever's sexy on the day, because that's just not the way it works.
No, you're several years too late. Okay, my final question to you, Brad. You still, as discussed, you still have Newmont as your largest shareholder. And with the recent raise in Canada, you're bringing some institutions in to balance the UK retail base. All well and good. Why should OMI be on people's watch lists right now?
Well, a bit of a self-serving question, I suppose. Look, I think we've certainly turned a corner since the beginning of December last year. That first hole at Pepas was just an absolute, mind bender, in the market, took notice, which was excellent. So we've jumped out of the pack. Now that's great. But there's still 3,000 junior miners. So I guess the point is that one thing to have a record high gold price. But if you don't have any gold, then what's the point? So I think it's the fact that we've got a group of really good assets that, again, have taken years to get here, but good assets in the right commodity, in the right place, at the right stage of development, that are able to throw off outstanding news flow at a time when the market is really hungry for news flow and for things to invest in. So I think it's just that point. We've just jumped out of the pack at this extraordinarily fortuitous moment in history where the gold price is going nuts. So, and we have assets. I confess we're really bad at marketing ourselves. I need to iron my shirt and get out and be a bit better at that. But we're not a bunch of shiny suited spivs, and maybe we should be, or at least learn to be. But for us, all our assets, we've just spent our last few years just building assets, advancing those assets. But now we've got this really good bunch of assets, again, the right place, right time, and importantly, we have the cash now to make them work.
Brad, you're a complete star, shiny suit or no shiny suit. Thank you very much indeed for joining us from Perth, Australia today. Probably either up at the crack of sparrows or very late in the evening. So thank you indeed for giving us the Orosur Mining story in detail. I am grateful, the audience are grateful. Thank you very much indeed.
Always a pleasure.